If you are a green card holder living in the United States or even living abroad, there are 5 tax mistakes that thousands of permanent residents make every single year. And here is the part that most people do not realize. These mistakes are not just financial problems. They can be used against you when you apply to renew your green card, apply for citizenship, or even re-enter the United States after traveling abroad. Today, we are going to walk through each one of those mistakes, clearly and simply, so you know exactly what to watch out for. Welcome back to Immigration Radar USA, the channel where we break down complex U.S. immigration rules into clear, simple information you can actually use. Today's topic is one that does not get talked about enough in the immigration community. Most green card holders know they need to follow immigration rules, keep their address updated, not stay outside the U.S. too long, avoid certain criminal records. But what many permanent residents do not fully understand is that the IRS, the Internal Revenue Service, which is the U.S. tax authority, is also watching. And your tax record is now a formal part of how immigration officers evaluate whether you are a person of good moral character, whether you have maintained your lawful permanent residence, and whether you are eligible for naturalization. The information in this video is based on official IRS guidance, the U.S. Tax Code, and USCIS policy as it stands in 2026. We will explain each mistake in plain English, give you a realistic example, and tell you exactly what you can do about it. Let us get into it. Mistake number 1, not filing a federal tax return at all. This is the most common mistake and also the most damaging. Many green card holders, especially those who move to the United States later in life, or those who work informally, or those who receive income from outside the country, believe that if they do not owe any money to the IRS, they do not need to file a tax return. That belief is incorrect, and it can cause serious problems. Under U.S. law, green card holders are treated as U.S. tax residents. This means that from the moment you receive your green card, you are required to report your worldwide income to the IRS every year, even if that income comes from a job in another country, a pension from your home country, or rental property overseas. The filing requirement is not based on where your money comes from. It is based on your status as a lawful permanent resident. So, what happens if you do not file? First, the IRS can assess penalties and interest on any unpaid taxes. But the immigration consequence is just as serious. When you apply for naturalization, U.S. citizenship, the USCIS officer will ask you directly whether you have filed your tax returns for the past 5 years. If you have not, your application can be denied. An officer may determine that failing to file taxes shows a lack of good moral character, which is a legal requirement for naturalization. There have also been cases where green card holders who abandoned their tax filing obligations were found to have effectively abandoned their residency. Immigration courts have used long gaps in tax filing as evidence that a person did not intend to make the United States their permanent home. The practical takeaway here is simple. File every year, even if you had low or no income. Even a zero-income return is better than no return at all. Mistake number 2, not reporting foreign income. This is where a lot of green card holders get into serious trouble without even knowing they are doing anything wrong. Let us use a realistic example. Imagine a woman named Maria. She moved to the United States from Mexico 5 years ago and received her green card. Back in Mexico, she still owns an apartment that she rents out. Every month, she receives the equivalent of about $800 in rent. Maria files her U.S. tax return, but she only reports her U.S. salary. She does not mention the rental income from Mexico because she thinks it is a Mexican matter handled by the Mexican tax authority. Maria is making a significant mistake. The United States taxes its residents, including green card holders, on their worldwide income. That means the rental income from Mexico must be reported on her U.S. tax return, regardless of whether she also pays taxes on it in Mexico. There are provisions in the U.S. tax code, such as the foreign tax credit, that may reduce the amount she actually owes to the IRS, but she must still report the income first. The same rule applies to foreign pensions, foreign bank interest, dividends from foreign investments, and income from freelance or consulting work done for non-U.S. clients. The IRS has significantly increased its ability to detect unreported foreign income in recent years. Under international tax agreements and the Foreign Account Tax Compliance Act, known as FATCA, foreign banks now routinely share account information with U.S. tax authorities. If you have a bank account in another country with more than $10,000 at any point during the year, You are also required to file a separate report called the FBAR, the Foreign Bank Account Report, with the U.S. Treasury Department. Failure to file the FBR can result in penalties of up to $10,000 per year for non-willful violations and far more for willful ones. From an immigration standpoint, underreporting income is considered a serious matter. It can be viewed as a form of tax fraud, which is a crime involving moral turpitude under U.S. immigration law, a category that can make you removable from the United States. Mistake number 3, claiming a tax status. You are not entitled to. This one is more technical, but it matters greatly, and it trips up green card holders in 2 specific ways. The first issue involves filing status. Some green card holders who are married file their tax returns as head of household instead of married filing jointly or married filing separately. Head of household is a filing status designed for single parents or unmarried individuals supporting a dependent. If you are married, you generally cannot use this status. Claiming it incorrectly can reduce your tax bill in the short term, but it flags your return for IRS review. And when the IRS contacts you about it, there is now a paper trail that immigration officers may encounter. The second issue is more nuanced. Some green card holders, particularly those who have spent significant time outside the United States, mistakenly file as non-resident aliens using IRS Form 1040-NR instead of the standard Form 1040 used by U.S. residents. This is a critical error. By filing as a non-resident, you are essentially telling the IRS that you do not consider yourself a U.S. resident. USCIS officers are trained to look at tax returns during the naturalization process, and if they see that you filed as a non-resident in any of the 5 years before your application, they may conclude that you abandoned your permanent residency. There are certain limited circumstances where a green card holder might have grounds to claim non-resident treatment under a tax treaty, but these situations are legally complex and relatively rare. If you believe this might apply to you, you need to consult a tax attorney who specializes in international tax law, not a general accountant, and certainly not advice from the internet. The decisions you make on this issue carry long-term immigration consequences. Mistake number 4, failing to pay taxes owed or making deals with the IRS without understanding the immigration consequences. Here is a situation that comes up more often than you might expect. A green card holder files their taxes properly, but they cannot afford to pay what they owe, so they either ignore the bill, set up an installment agreement with the IRS, or offer a settlement, what the IRS calls an offer in compromise, to pay less than the full amount. In terms of IRS compliance, installment agreements and offers in compromise are actually legitimate tools. They show that you are engaging with the tax system and trying to resolve your debt. However, from an immigration standpoint, having an outstanding or unresolved tax debt or having formally compromised on a tax debt can raise questions during your naturalization interview. The naturalization application, Form N-400, asks specifically whether you have ever failed to file a tax return or pay taxes when required. If you have had tax issues in the past, you must be honest and transparent on this form. Attempting to conceal past tax problems is far more damaging than the problems themselves. More urgently, if the IRS files a federal tax lien against you because of unpaid taxes, that lien becomes part of your public financial record. Federal tax liens can come up during background checks and can complicate both renewal applications and naturalization proceedings. There is also a provision in U.S. immigration law specifically related to public benefits and financial self-sufficiency, the public charge rule. While unpaid taxes are not technically a public charge issue, a pattern of financial irresponsibility that includes unpaid taxes, liens, and unresolved debt can, in some circumstances, create a broader negative impression of your financial stability. The safest course of action is to address any unpaid taxes as quickly as possible. If you cannot pay in full, set up a formal installment agreement with the IRS and keep every payment on time. Document everything. Mistake number 5. Not understanding how long absences from the U.S. affect your tax and immigration status together. This final mistake is one that often surprises people because it sits at the intersection of tax law and immigration law in a way that most people do not anticipate. Green card holders who spend extended periods of time outside the United States face 2 separate sets of risks. On the immigration side, absences of more than 6 months can raise questions about whether you have abandoned your permanent residency. Absences of more than 1 year generally trigger a presumption of abandonment unless you have a re-entry permit. But here is what many people do not realize. On the tax side, if you are a green card holder who spends a substantial part of the year living in another country, the IRS still considers you a U.S. tax resident for that entire year. You must continue to file U.S. tax returns and report your worldwide income, no matter where you lived, no matter how many days you spent in the United States. Some green card holders who move back to their home country for family or health reasons stop filing U.S. taxes because they assume that leaving the country ends their U.S. tax obligations. It does not. The only way to formally end your U.S. tax residency as a green card holder is to officially abandon your green card by filing Form E-407 with USCIS or to have your status terminated by an immigration court. Until that formal abandonment happens, you remain a U.S. tax resident in the eyes of the IRS. If you do eventually decide to formally give up your green card, be aware that long-term residents, defined as green card holders who have been permanent residents for at least 8 of the last 15 years, may be subject to an exit tax. This is a one-time tax calculated as if you sold all your worldwide assets on the day you gave up your card. It is a complex calculation that requires professional tax and legal advice. The key point for our viewers here is this. If you travel frequently, live abroad part of the year, or are considering leaving the United States permanently, you must understand how those decisions affect both your immigration status and your tax obligations at the same time. These two systems are connected, and a decision that seems sensible on one side can create serious problems on the other. Let us take a moment to bring all of this together in practical terms. If you are a green card holder who has been filing your U.S. taxes correctly every year, reporting all your income including foreign sources, using the right filing status, and paying what you owe, you are in a strong position. Keep doing what you are doing. If you are not sure whether your past returns were filed correctly, or if you have missed a year or two, the best thing you can do right now is consult a tax professional, ideally one with experience in both U.S. tax law and immigration. There is a process called a voluntary disclosure that allows taxpayers to come forward and correct past mistakes, often with reduced penalties. Acting proactively is always better than waiting for the IRS or USCIS to discover the problem. If you are planning to apply for naturalization in the next 1 to 5 years, treat your tax record as seriously as your immigration record. USCIS officers are trained to review tax transcripts, and inconsistencies between what you told the IRS and what you tell USCIS can result in a denial, or worse, a referral to Immigration and Customs Enforcement. And if you are a green card holder who travels frequently or has strong financial ties to another country, consider scheduling a consultation specifically focused on how your international situation affects your U.S. tax filing obligations. The rules are not intuitive, and the stakes are too high to guess. To summarize what we covered today, green card holders are treated as U.S. tax residents and must file federal tax returns every year reporting their worldwide income. Failing to file, not reporting foreign income, using the wrong filing status, leaving tax debts unresolved, and misunderstanding how time abroad affects your obligations. These are the 5 most common and most consequential tax mistakes that can put your immigration status at risk. None of these mistakes are impossible to fix, but they are much easier and much less costly to prevent than to correct after the fact. Stay informed, keep your records clean, and when in doubt, get professional advice from someone who understands both tax law and immigration law. Thank you for watching Immigration Radar USA. If this video helped you understand something important about your rights and responsibilities as a green card holder, please give it a like, share it with someone who needs to see it, and subscribe to Immigration Radar USA for the latest U.S. immigration updates delivered clearly, accurately, and in plain English. We will see you in the next one.